Welcome back to the COO's office. We have spent a lot of time looking at the sky. We analyzed the weather, the interest rates, the exchange rates, and the macroeconomy. We know if it is raining or sunny. We also looked at the castle, the economic moats that protect a business now. We need a map. Imagine you are an explorer trying to find a lost city of gold in the Amazon jungle. You have two choices. Choice A, you grab a machete and just start hacking through the jungle, hoping you stumble upon the gold. By luck. Choice B, you go to the library, you find the maps drawn by the explorers who came before you. You study the terrain and you plan your route. Most amateur investors choose choice A. They read a headline, they hear a rumor, and they hack their way into the market. They usually get lost or eaten by tigers. The coup of you Inc. chooses choice B. The coup uses industry reports. Today, we are going to discuss know-how on analyzing industry reports. We are going to learn how to extract gold from those 50-page PDF files that everyone else ignores because they look too boring. First, let's understand what an industry report is. Investment banks, brokerage firms, and consulting companies hire armies of smart analysts. These people spend 12 hours a day, every day, studying one specific thing. One guy studies only semiconductors. Another studies only electric vehicle batteries. They interview CEOs, they visit factories, they count shipping containers. And then they write down everything they know in a report. These reports are the most undervalued resource in the investing world. They are essentially cheat sheets. But you have to know how to read them. If you read them cover to cover like a novel, you will fall asleep. You need a strategy. Here is the COO's 3-step framework for analyzing industry reports. Step 1. The Skim and Scan strategy. Do not read the whole thing. Start with the executive summary. This is usually the first page. It tells you the main thesis. Then, skip the text and look at the charts and graphs. A picture is worth 1,000 words. Look for the charts that show CAGR, compound annual growth rate. Is the industry growing? Is it flat? Is it declining? Look for the chart that shows market share. Who is the king? Who is the challenger? If you see a chart showing that the entire industry is expected to triple in size over the next 5 years, stop. That is a signal. That is a tailwind. Step 2. Detect the consensus versus variant perception. This is where you become a detective. Most reports will tell you the consensus, what everybody already knows. Electric vehicles are the future. People are aging. This information is useless because it is already priced into the stock. You are looking for variant perception. You are looking for the analyst who says something different. Everyone thinks company A is the leader, but company B has a new technology that will disrupt them next year. Everyone thinks this industry is dead. But actually, supply is shrinking, so prices will skyrocket. When you find an opinion that disagrees with the crowd, pay attention. That is where the alpha is. That is where the profit potential hides. Step 3. Filter the sell-side bias. This is the most critical skill. You must understand the psychology of the people writing these reports. Most reports come from the sell-side brokerage firms that want to sell stocks to clients. They also want to maintain good relationships with the companies they analyze. Because of this, they almost never say sell. If a company is terrible, they will rate it hold or neutral. If a company is okay, they will rate it buy. If a company is great, they will rate it strong buy. So you must decode their language. If an analyst downgrades a stock from buy to hold, that is actually a polite way of screaming sell now. Do not look at their target price. The target price is often just a guess to generate headlines. Ignore the price target. Focus on the data and the logic inside the report. The data is usually accurate. The opinion is often biased. Now, where do you find these reports? If you have a brokerage account, you often have free access to their research center. You can also search for reports from major consulting firms like McKinsey, Bain, or Gartner. They often publish free summaries on the future of AI or the future of energy. Google is your friend. Search for industry name Outlook 2026 PDF. You will be amazed at what you find. Let's practice. Let's say you are interested in the robotics industry. Don't just buy a robotics stock. Download 3 different reports on the robotics industry. Report A says the growth will come from industrial factories. Report B says the growth will come from humanoid robots in the home. Report C warns that raw material costs for robots are rising now. Synthesize this. Okay, the industry is growing charts. There is a debate about industrial versus home robots variant perception. And there is a risk of rising costs risk factor. Now you have a map. Now you can make an educated decision. The goal of reading these reports is not to become an expert overnight. It is to understand the key performance indicators KP is of that industry. If you are analyzing a retail company, the report will tell you that same-store sales is the most important metric. If you are analyzing a mining company, the report will tell you that cost per ounce is the metric. Once you know the rules of the game for that specific industry, you can judge the players. You have the map. You know the terrain. You know where the gold is supposed to be. But even with the best map, the expedition will fail if the leader of the expedition is incompetent. You can have the best business model in the best industry, but if the CEO is a crook or a fool, the ship will sink. We need to vet the captain. In the next episode, we are going to look at the people running the show. We will discuss management analysis. Who are you partnering with? We will learn how to spot a visionary leader and how to spot a fraud. Download a PDF, look at the charts, ignore the target price. I'll see you in the next video.